You have found Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. Past audio episodes of the Authentic Business Adventures podcast can be found at the Draw In Customers podcast link on the fancy web. We're locally underwritten by the Bank of Sun Prairie. My name is James Kademan, entrepreneur, author, speaker, and helpful coach to small business owners across the country. And today we're welcoming / preparing to learn from Bill Quigley, a certified mortgage advisor with Amerifirst Home Mortgage. And I'm excited because we're talking about money and houses and mortgages. This is a crazy world that we're in, right?
It's on everybody's mind today. It has been in everybody's mind. It'll be on everybody's mind for quite some time. What's going on in the real estate world? What's going on with interest rates?
Yeah, it's so funny. I was just digging through my filing cabinet and I came across, I think it was a refinance that I did years ago, and it was 6% for a house. And I remember back then we thought, holy cow, we're on top of the world. We got 6%. Because I remember the first time I got a mortgage, I think it was 6.875. And we were dancing on tables then, thinking we were awesome. Now, what do they know?
Well, let me go back to my first mortgage on a purchase when I lived in California. 11.25 at 2 points. That was a steal on a 3-year fixed.
Oh, that was a 3-year fixed.
That was a while ago, okay?
Wow.
But now that was a deal. But I remember also locking in on a refinance 30-year fixed at 6% and thought, never will we see this again.
Yeah.
I'm going to keep this house forever,
Right.
pay it off and not worry about it. Well, times change, rates change, the market changes.
But there's zero is not moving. It's still...
Well,
we seem to be approaching it, or did approach it, I suppose. I don't know where interest rates bouncing back.
Interest rates are bouncing back, and you have to look at what are mortgage rates, what's the Fed funds rate, what are bank rates, what are adjustable rates. There's all different types of rates in the marketplace.
All right.
If you're looking at a mortgage rate today, we're in March of 2022. Okay, mortgage rates are in the 30-year fixed 4% range.
All right.
Now, you go back a year, a little bit more than a year, 2.75, 2.5%.
Yeah.
What happened? I mean, as consumers, we get used to what's out there. Everybody's used to 2.5%, 3%. What do you mean we're at 4%, 4.25%? What happened? That's too high. And I love to tell the story. Well, here's my first mortgage a long time ago. This is a steal. Money is cheap. If you're below 6%, it's cheap. It's cheaper than renting. You have to buy versus rent.
Yeah, the rate of inflation is higher than the rate of borrowing money. So
Substantially
right now.
Cheap. Housing inflation is staggering the way prices are going up right now.
Okay.
You can't lose by buying right now. Housing prices are going to go up again this year in 2022.
They are?
Yes. We have an inventory issue. That's one thing that everybody's talking about. I can't find a house. I can't get my offer accepted. I go to an open house. There's 20, 30 people there. What do I do? That's going to keep pressure on prices. There's a long reason why we're in this inventory issue and why it's going to continue for a little while.
Okay.
It could be a couple years that it really takes a little while to work out and get back to a balanced market. It's going to be different depending upon where the economy goes. A lot of things going on worldwide that will affect our economy. The Fed's going to be making some moves that are going to affect our economy. So a lot of things will be shaken out by the end of 22 to give us direction on where we're going in the following years.
All right. Interesting. So how does you and your business, where do you guys fit?
We are direct, more independent mortgage bankers, meaning
Okay.
we're not a bank. We don't do savings accounts, checking accounts, debit cards, credit cards. We do mortgages and only mortgages, and we do them extremely well because that's all we do. We'll originate it, close it, fund it, and we service it. We don't sell your mortgage.
Oh.
Most lenders out there are going to sell your mortgage. Who knows where it's going to end up? Is something going to get missed? Are your taxes going to get paid? Is your insurance going to get paid? Did my payment get lost in the mail? Why do I have a 30-day late on my credit report now? We keep the servicing, so you don't have to worry about that. If there's better opportunities to refinance or get rid of your mortgage insurance or put you into a better program, we're going to be proactive with you and get you into that program because you're in our servicing portfolio. We want to keep you. We want to make you happy, get referrals from you, grow our business.
All right. Interesting. So you've been with Amerifirst for how long?
About 8 years.
Okay.
I have branches in Milwaukee and Madison.
All right. And you've been in the mortgage industry for longer than that, though?
23, 24 years.
All right.
Yes.
So you lived through the 2008, 2009 debacle?
I did.
All right. And I imagine even early 2000s, there was just financially challenges.
Definitely. The market goes, I've been through probably 7, 8 different refinance cycles where rates went down, then they're back up and down and back up. Now rates were down to historic lows, and now they're going back up, and there's different challenges the industry is going through.
All right.
Previous to being in this business, I was a contractor.
Oh, really?
And,
Okay.
Long story of how I started there, transitioned into mortgages, and where I am today.
All right. Still in the building, but just your hands are a little cleaner.
Well, I'm on the
less
financing end of building.
All right.
So my first degree was in construction management from UW Stout. Graduated, packed up my car, moved to California to see a good friend of mine.
Nice.
Loved it, stayed, built a career, went to graduate school at USC, got a degree in finance and real estate from USC. Did a lot of building and developing, and ended up getting married, started having kids. We're living in Northern California, and my wife became ill. And we're in an area where we have no family around, it's just us. So my wife is ill, got to take care of the kids. I had to make a change in my life. Because working in the trades or in construction development, you leave early, you get home late, days are long. I needed to be home to take care of family. Now I had a good friend that was in the mortgage business who did a lot of financing on the homes we built. And he said, I got an idea. You could do this for a while until things get better and then transition back, but we'll work it out where you can work at home. So I was working at home a long time ago, before it was fashionable with COVID, taking care of family, but then we ended up moving back here because we want to have a better place for the kids, for schools, better place to grow up, better medical care. So we moved back here in '99 and continued the business here and opened up here. Unfortunately, I lost her about 12 years ago, so raised the kids, but just stayed in the business. And with Amerifirst, there's opportunities as a lender that I'm still involved in the construction business and the remodeling business with some of our products. We're one of the nation's lenders in remodeling financing.
All right.
You can purchase a home and remodel it all with one loan. You can refinance and remodel all with one loan. Very risk-free.
So you're not having to take a loan out for the whole,
well, and
then another loan for the building,
Correct.
and then refinance when it's all done.
Right. You do it all today based on today's low fixed rates. You know what your value is when that work is going to be done.
All right.
So you know what risk you're taking. Am I doing the right improvements to get my equity back? You don't have to refinance later. There's no interest rate risk. There's no valuation risk. If you lose your job 6 months, it's okay. The loan's already, well, it's not okay. We'll be find another one. But
pay it back.
There's been situations where I've helped people that had a construction loan with someone else. They needed to get it. There again, they bought the lot with one loan. They got a construction loan with another loan to pay off the lot loan. When the construction's done, they have to get another loan to pay off the construction loan. So it's 2 to 3 to 4 refinances before they're done. Well, he lost his job 3/4 of the way through the construction period. Oh. They've got to refinance that home or they lose it. What does he do? And we actually helped him make some introductions to help him find a job so that he could refinance out of that. So we go a little bit we go quite a ways above and beyond to help our customers.
All right.
But we take care of financing so you're done today. You know where you are rate-wise, risk-wise. You don't have to be reappraised or requalified later.
All right.
And the nice thing about our renovation loans, in today's market, if people want to find a home, they're having a hard time getting their offers accepted. They're paying way over asking price for homes that may need work next year, year after, or maybe today.
That blows my mind.
A lot of people are buying homes and then saying, okay, I need to remodel. What do I do? Well, I can't get a home equity line because I don't have any equity. I can cash in some stocks or investments or get a gift from the family. What do I do? There's companies out there offering kind of like credit card loans for home improvement. You got to be careful with those because they look really attractive. 0%, 12 months. Read the fine print. Where are you going to be in a year? What are you going to do with that loan? Are you doing the right improvements to refinance out of it in a year so you can pay that off before it goes to 18, 24% because it is a credit card?
Yeah.
So I'm encouraging people, read the fine print, whereas we can help you buy that home if it needs work with a renovation loan. For the realtors that might be watching, it's a typical transaction for them. You don't have to have the work done before you go. It's just we get a contractor involved who provides a bid and a scope of work. An appraiser will appraise the home based on what it's going to be worth when the work is done. We close it like a standard transaction. They don't have to close again. The realtors are done. The sellers are done. Contractors come in and do the work. You move into your remodeled home that's done the way you want and live happily ever after.
So from a timeline point of view, let's say you're looking at a house or a potential client is looking at a house, and that house needs some work. They have 50 people making offers on that place with their story or their ideas. The person that's your potential client, they're trying to get a contractor in there to figure out a ballpark price too in that kind of squeezy timeline, right?
Well, most of the homes that we're having the highest traffic, they're homes that you can move into right now.
Okay.
They don't need, there are probably, many of them are very nice. They're ready to move in. It's what people want. Some of them, people are buying saying, I'll fix stuff up later. I'll do the kitchen later. I'll do the bathroom later. You know, it isn't exactly what I want, but I want a home. And the market's getting very emotional where people really want a home and they're willing to.
Oh my gosh, when I see people or hear about people throwing $40,000, $50,000 cash on top of asking, I'm like, oh my gosh, you're upside down really upside down on day one.
Well, we have an analysis that we can work with people to show them based on current appreciation rates, where are they going to break even on a situation like that? So if anybody's interested, I could walk them through that to show them where they're going to get that.
Okay.
But the downside to what people might be doing in that case is they're buying a home that needs work. It isn't, okay, it's 70% of what I want, close enough, because I want a house. And I know a lot of people that have done that. There's a bit of a buyer's remorse after the fact because, okay, now I'm upside down. Where am I going to get the money to do the work? How am I going to do this?
Fair.
The homes that I'm
justified.
The homes that we're helping people with, there's homes in the marketplace that they need work. It's you drive by, it's like I'm not looking at that. But with a little bit of vision and creativity, the right contractor and designer, you can look at that home and say, I can get a very good value on that. I can make a certain investment into it. When I'm done, I've got the home that I want that looks the way I want. It has the kitchen or the bath or the basement or whatever I want. I don't have to worry about updating certain mechanicals later because I already did it.
Yeah.
I know what my value is today before I even sign on the dotted line. So you're making not only a solid investment, but you're getting the home that you want. And there's not a lot of people chasing that home.
There
might be flippers looking at homes like this, but if the margins don't meet the flippers guidelines,
sure, because
it's
they're trying to make
they have to have a certain margin.
Yeah.
But for a home buyer, that margin's much smaller, where you can buy it, renovate it, be within market value, and have exactly what you want.
Because they're looking to actually live in it.
Yes.
Flippers looking to make a profit.
They have to have a profit margin and a contingency margin and a margin for error.
Yeah.
Now, people that are doing this, and what we're doing now is we're creating partnerships between us as a lender at Amerifirst, different renovation contractors in the area, and realtors. So we've got this trifecta of a team that will help people find homes that need work. Some realtors are picking up that little niche of a specialty to find listings, because every realtor needs listings. We have a shortage of listings. They want to have listings. If you can get a hold of this concept of listing homes that need work, where we bring in a contractor who's then going to look at the home and say, here's options 1, 2, and 3 to renovate the home. Here are the various budget options. Here's your all-in budget. I then prepare budgets and analysis for financing to show home buyers, here's what your down payment, if a down payment's even necessary. Here's what your monthly budget looks like.
You say if a down payment?
Yes. Because there are programs that a down payment's not required. They're again first-time home buyers, certain income restrictions. It's not for everybody.
Okay.
But there are
is this 2008 all over
No,
again?
it is not. These
Okay.
I'll explain 2008 a little bit later.
Yeah.
Now, but you can go with little to nothing down or whatever you want, but they're going to have the home that you want. And we prepare these scenarios for potential home buyers, and they look at the home. They might have a couple of renderings from a contractor or designer of what the outside might look like, or just here's what I've done on other homes. What contractors are providing us is here's different things that we've done. Here's a kitchen. As an example, we had an open house a little while ago in Brookfield.
Okay.
Nice home, great lot, look nice on the outside, nice stonework, siding, roof, windows, everything's good, new driveway, garage, inside, 3-bedroom, 2-bath, basement's okay. Kitchen was a disaster.
Oh.
Don't know what the homeowner was thinking when they did it. It was just bizarre what they did. So people would walk in, look at it, oh, out of here.
Oh.
Priced right, there again, hot market, people are in and out, see the kitchen out. And I asked the realtor, let me bring a kitchen person in with some renderings. I'll prepare a few budgets. And let's just let the home buyer see this option. So next weekend, people come in, they like the home, oh, that kitchen. I'm like, wait a minute. Here's some renderings from a kitchen contractor of what she can do for a certain budget. Do you like that? Love it. How do I pay for it? Well, here's your purchase renovation mortgage. You buy it with a renovation mortgage, you do the work, you move in, you live happily ever after.
All right.
House went like that.
Interesting. Okay.
So the home buyer gets what they want at a home at a good value. They get the kitchen that they want. Renovation contractor has more work. We provide a mortgage for the consumer. The agent has a listing that is sold, and more referrals because the home buyer is so happy. It's like, I got a house and I'm getting my dream kitchen and this is going to be awesome.
All right.
So what we do as a lender is try to create solutions to what's going on in the housing problem. Right now, our realtor partners need listings. We're trying to find a way for them to get more listings. One is the renovation piece. There's a lot of properties in the marketplace that need work that consumers really don't want to look at, but do just a little bit of partnership work. We can show the consumer what can be done, a little bit of imagination, a couple extra steps, and you have more people buying it, getting into homes at affordable rates with getting the home that they want.
All right. Do you mind if I play devil's advocate a little bit?
Absolutely.
Because my experience with contractors has not been great. And I would guess that most people's experience with contractors has not been great. So when you're referring a contractor, do you ever get people that get the house, the kitchen's halfway done, contractor's working on some other thing, and like people are ready to move into this house, and they're like, hey, we still need a kitchen. Contractor guy is nowhere to be found, or subcontractor's nowhere to be found. And you kind of get the blame for that a little bit, I imagine, because you referred. So do you ever get into that kind of?
We refer contractors that we've worked with before for years.
Gotcha,
and
okay.
they see the value in what we're doing as a
Right.
partnership between the contractor, the realtor, and the lender.
All right.
They're looking long term. A lot of contractors are super busy right now, and I've heard horror stories of what can be happening. One I keep hearing over and over is where the homeowner's got cash, contractor wants to get paid. Here you go, and all the money's gone, but only half the work's done. We are very strict in the contractors we work with. We vet them to make sure that they've got a good background, they're not being sued, their license and insurance is in place. We check their references, past customers. Are they happy? And we use a lot of the same contractors over and over that have performed this work, that know the value in it, because eventually that construction demand is going to drop a little bit, or maybe substantially in the future, dip down the road. And the contractors that we're working with see the value long term in working with realtors and a lender to help home buyers, because we're going to have a high demand for housing for a long time based on the shortages that we have.
All right. And when you say shortages, you mean the quantities of houses that we have, or the quantity of houses that are on the market?
Well, there's two sides to that. The available inventory right now for the purchase market, which is substantially low, staggeringly low. A balanced market is 6 months worth of homes for sale. That's a balanced market. Madison, you're what, 2 weeks?
2 weeks?
3 weeks? It's staggeringly low.
Wow.
It's very low. And I could be wrong on that, and I'll check in with a couple of
Even
realtors.
if you're half wrong, right? A month?
It's frighteningly
Wow.
low. That's very low. That's why we're encouraging people, look for a different type of home that you can create value and turn it into your own home and just be happy, versus fighting everybody else to overpay for something you're going to have to put work into and money into in a very short period of time. So now I also work in the Milwaukee area. There is more inventory there, but not a lot more. There is a greater opportunity for the renovation piece, because there's many more homes over there that are older, that need work, that are not going anywhere because buyers look at it and don't know what to do with it. I can't buy that and fix it myself, and I don't know where I'm going to get the money to fix it. Where we're creating partnerships there again with the contractors, the realtor, and us, the lender, to present to consumers, here's a home with a little vision, here's what you can have, and it's gaining a lot of momentum and helping a lot of people get into homes that weren't getting into homes before.
Sure. Is the housing market here similar to the rest of the country, or are we in a little bubble?
I would not say bubble, no. It is not 2008 again. 2008, there were far too many...
I guess when I say bubble, I mean, is every area, or almost every area, having a similar volume issue?
Nationwide, there is a shortage of housing.
Really?
Now, Madison is extremely tight. There are certain markets that are extremely tight for housing. Everybody wants to live in Madison. It's a beautiful community. Who wouldn't want to be here?
All right. 6 months of the year, it's fantastic.
Dane County area, everybody wants to be here. I lived here for 22 years. I do live in the Milwaukee area now because we're doing a lot of business there, and just, there again, widowed single dad, the kids are gone. I'm checking out that area to see what's going on. I'm enjoying it. But
There's some fun to be had in Milwaukee, that is for sure.
There is. But there's, with all the economic demands here of employment, the government, the universities, the hospitals, the insurance companies, the high-tech stuff, all the employment that is here, there's high-income earners here that want housing, and there just isn't enough available.
Interesting, okay.
Builders can only build so much, and they're also worried, like, we're not going to go too far out there because we know what happened 12 years ago, 14 years ago. We don't want that to happen again. But then there's such a demand, I think they could easily, if they could get the material, the labor, and the permits to build more, they would, because the demand is there and it's very clear it's going to be there for some time.
Labor is probably the biggest of those, I would imagine.
Labor and materials, yes. Same thing, builders are having a hard time in the Milwaukee area nationwide as far as getting the materials they need. Some of the older seasoned builders in other parts of the country, I've read stories of they're just like, I'm done. I can't do this fight anymore. And they're getting people and materials. So it is a challenge. It's going to be a challenge for a while.
I'm a terrible predictor, but I don't see the labor thing getting better in anytime soon. I remember I hired my first employee, I don't know, 2008, something like that. And I thought, oh my gosh, this is a mess. Who acts like this? And then as I added employees, I was like, oh, the majority of the world acts like this. And as I talked to other business owners with employees, it has gotten worse from a work ethic point of view, from my perception.
Okay.
And I keep thinking, how did that happen? And how is it going to turn around? Will it turn around? I'm like, I don't see it turning around.
There's a couple of different things we're looking at and how that there will be a shift in that we
I would
see.
love that.
It's going to be a little ways down the road, but what we see is, I mean, right now in the economy, enormous demand for workers, any field.
Huge,
and
yeah.
people, I was talking to a kitchen remodeler yesterday, and she had 5 interviews set up for last week. 4 didn't show up.
Yeah.
They didn't call, just nothing. One showed up, didn't care, left.
Yeah.
It's a high-paying job that, you know, I remember years ago, you want to get into construction, people are clawing to get into the construction industry.
Yeah.
And now it's like, I don't know. The shift we see coming is right now there's a high demand for employees. Companies need people. The economy is cranking along, but here comes inflation. A couple reasons for inflation: the supply chain, conflict overseas, fuel, a lot of different factors going into inflation, which is increasing prices. It's putting pressure on corporations. As the Fed steps in and starts increasing rates, which they're going to do pretty quick, and they're going to keep going throughout the end of the year, the cost of doing business is going to get more expensive for companies. They're going to have to do something. They can raise prices, but they can't, because then they can't sell products. So if they have to keep their prices at the same point or even lower to sell, because the cost of money is higher, consumer has less money, what do? They have to reduce cost. So maybe they have to start getting rid of people. Then people say, wait a minute, I'm going to lose my job? I can't dictate my own wage? What's going on? So if the economy slows down later in 2022 into 23, which could very likely happen because the Fed's got to make a big move. They don't have a choice because they've got to get curtail inflation. Will the economy slow down? Will corporations then have to release people? Will that start getting out into the world? And people will say, wait a minute, people are losing their job? What's going on? I better do something. And then maybe that competition for good jobs will come back into place, or people will pay attention and come back into the workforce. It will work itself out. It's taking a long time because there's so many factors with the economy, still getting things patched up from COVID, overseas conflicts. There's so many factors involved.
But these are problems that I've seen for over 10 years.
Sure.
Where they're just like the beyond, I need to look for a job, just the whole awareness that an employee has to provide value in order for an employer to value them. Like the goal of an employer is not to have employees. The goal is to be able to make your widget off of your service, and oftentimes you need employees to do that. And I feel like employees don't understand that they are a tool just like everything else, just like money, just like equipment. They're a tool. You can put emotion in there as much as you want, but in the end, I didn't go into business specifically so that I could feed a bunch of people.
Yeah, but the people that are going to work for you have a different emotional capacity
Totally. So you got to understand,
of what you have.
I made a promise to them as an employer that I will, put food on their table, help them pay for their house, blah, 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 right? But that's a two-way promise. They promise to do the job, I promise to pay them. But a lot of times I'm finding that they're like, well, I'm kind of keeping my promise.
Employees in today's world want more than just a job and a paycheck. They want to feel like they're doing something. They want to be a part of something. And if they feel like they're just a tool, they're not motivated. And that's why many organizations, Amerifirst is one of them, we create an environment. I mean, people talk about culture. We have a certain culture.
All the time.
Everybody talks about it. Nobody delivers. We have a culture where it is a culture. It's a family. We have constant communication all the way to the top about what's going on, what do we need, how's it going to work. And they listen, and they bring those ideas back down to every level of the organization. Everybody's a part and everybody has a voice. In today's mortgage business right now, there are the big companies who came into a refinance market and they had the hottest prices in town and they were hiring people left and right and offering good wages. Well, now they're in trouble because all they had was a price. They didn't have service. They don't know how to compete in a short inventory marketplace without refinances. They don't know what to do. They're cutting people left and right. Some of the biggest players out there, people are getting their paycheck and inside there's a little note saying, thanks a lot, goodbye. That's it. That's it. There was a coworker or someone I knew that worked in Michigan, left a little over a year ago. And I was disappointed to see her. I never really worked with her, but I met her a few times in Michigan. Great person, did a great job, nice family. And she left to another organization. And I remember thinking, that may come back to haunt you because that organization is one of those companies that when things shift, they're going to make a shift. They made
Okay.
the shift last week, and she posted on Facebook, I can't believe it. I can't believe I left an organization where people actually cared and had good people, and I went for a couple bucks somewhere else, and she said it was a 5-minute talk, put everybody in a room, 5-minute talk, goodbye, boom. That's,
Wow.
now, different things like that will be happening, sooner or later the economy is going to slow down.
Right.
If it's
Or
overheated,
continue to.
the Fed's going to step in and put the brakes on some things. That's going to be happening in different segments, and that will filter out into the workforce with people saying, I better, I want something. They want to feel needed at their work. They're doing something of value. It doesn't matter what it is. It isn't just
right. I agree with that. We've worked very hard as far as culture goes.
Right.
It's extremely hard, but there's still a feeling. It almost seems like a feeling of entitlement that I feel like some employees have, that they're like, because I showed up today, I deserve X. Or actually more so asking for what I would consider to be, I don't want to necessarily say unrealistic requests, but requests that when I was an employee, back when I was their age, 20s, 30s, whatever, I would have never dreamed. I would have felt it rude to ask. It feels like one of those things, like you go to a funeral and you're just like, when's lunch?
Well,
Like, this is a funeral.
but a different time, different world, different economy. I remember growing up, we had to fight. I mean, I grew up in northern Wisconsin, rural farming community. We did hard work all day in the hot sun, and then come home and dad had 100 chores for you. And so, that was life. It was normal. That teaches you certain things. The world, the economy have evolved. Quality of life has improved. I mean, we did things that we thought were hard as kids to get through.
We did.
High school, college. But then I remember talking to my parents about what they did back in their day. It's like, whoa, really?
Right.
And
it was worse.
Every generation improves as far as the quality of life, technology, and we're in a place where technology is great and work and life should be easier. So
Should be,
many people call it entitlement. I call it just, we've kind of gotten to that place where things have gotten easier in many respects, and maybe the economy got to be too good, where it was easy in many respects, and people have an expectation, where now we're going to have to get back to a reality. The reality, I see it, it's here right now, but many people and companies aren't seeing it yet. And we'll just have to work through the transition and the pain that might be coming to get back to a place where, but we'll still have that standard and that quality will continue to increase. That's the purpose of a free market economy. Things get more efficient, quality of life will improve, and everybody's happier and healthier. So
should be.
Correct.
But I don't know if they actually are.
Yeah, I agree. But then again,
everybody, both of those happy and healthy, a lot of that's personal choice.
True, but we also have that. There's been a lot of political changes in our country as well. There's two sides that are very clear, and one side's like, I want them to take care of everything, and I don't want to worry about it or think about it. And another side might be, you got to get out and do something every day and create for yourself, and you can get anything you want. And it's been really, it used to be, I remember a long time ago with my parents, you didn't really recognize too much of a difference between different sides, and it's very clear today. Will that ever balance out again? I don't know. I hope so, because the divisiveness is challenging, not only in a personal but a business perspective too. We'll just have to see how that shakes out.
Yeah.
But some people call that entitlement. Some people want to live maybe like another country does. They don't have to do this. Well, okay, look at their quality of life or what they can and cannot do, or what they have to say, or what it costs for a gallon of gas, or a liter of gas, or petrol.
Yeah, right.
So there are pros and cons, and you really have to be clear on what you want and how you want to live, and what you're willing to do to get there.
Yeah, that's true. That's true. I keep telling my wife we got to move south. I hate winter, and she's like, we can't go south to worse schooling. And I'm like, the entire country south of us can't be that bad at schooling. But you look around, and I'm like, ugh.
Well, it depends on what there. Again, I mentioned when my wife became ill. She was a California girl. She loved California, but she also loved the Midwest. And it was a very easy choice, because not only did she like here, she liked the change of seasons, which you wouldn't expect from somebody in California, but it was healthcare and schools. Because schools there, and the first time I became aware of what the school was, we had some friends over on a Friday night, and one guy had to leave at 8 o'clock. He said, I have to go get in line because our daughter's entering kindergarten. That's Friday night at 8 o'clock. What are you talking about? He said, well, I got to go camp out and do this and this. I couldn't conceive what he was talking
Like
about.
they're waiting for a Star Wars movie or something?
Yeah, but the next morning I thought, I got to go see this. So I got some coffee and muffins and I went to the school. And people were lined up from the front door of the school, down the front entrance and down the sidewalk, camping out for a weekend until Monday morning to register their kids for kindergarten. We would never think of that in a million years here in Wisconsin.
No.
You live a certain area, my kids start school, we fill out some paperwork, the bus comes and picks them up or we drop them off, whatever. But they were camping out to get their kid into a school that was nothing more than a couple of modular buildings slapped together that we wouldn't consider a school here.
Right.
And I came home and said, he's going to private school because that's not school. But
That was the public school?
that was the public school.
What in the world?
Now, not every school out there was like that, but in our particular community, there again, people complain about property taxes, but they do pay for things. Public services, education, roads, services that we take for granted that they do pay for, that we have a pretty good system of in this area. And your wife brings a good point. Okay, we go somewhere else, what about schools? Well, you really got to do your homework. But then you go somewhere else to the south where it's nicer. Your summers are going to be like, I'm going inside where it's air conditioned because I can't handle it out there. Where in winter, okay, it's cold.
There's a happy
You have to
medium.
go back inside and stay
Yeah.
warm. You got to find that happy medium.
Right.
Like California was, it was 75 and sunny all the time. So
That sounds pretty awesome.
it's pretty awesome. But they're going to, believe it or not, being from the Midwest, you missed a rainstorm, you missed a snowstorm, you missed the holidays. So
Send a postcard.
Well.
I'll watch a movie that was taken in the winter or something like that. I don't.
you'd
You
have to
walk
be there.
outside and your face hurts.
You'd have to be there for a while. So yeah, but
Yeah,
it's,
I think I'd learn
there's
to
pros
love
and cons no matter where you go.
Yeah. All right. I get it. I get it. So the real estate. Let's talk about real estate in
Yeah.
California. That was crazy. Is it crazy as well now?
It's super crazy right now. I know some people, we have offices in California.
Okay.
I talk with people all the time in California. I had a call with someone in California today who is looking for a home. Now you think people are paying a lot here. She and her fiance were looking at homes 3 months ago in a certain area now down near San Diego.
Okay.
And
Crazy money there.
the area that they're way inland. So it's not
Oh.
in San Diego, but way inland.
Okay.
An good hour or so inland, which is more
Oh.
affordable. But now they're looking at homes that are in the $600,000 to $800,000 range in a certain market where he wanted to be in. She's like, no, I want to be a little bit over here. It's a little more expensive, but a nice area. I want to be there. Those are $1 million homes. Well, the $1 million homes were going for $300,000 to $400,000 over asking. So $1 million homes going for $1.5 million.
You're kidding.
No. After 3 months, she said, I finally came to my senses and thought, he's right. We should have been looking over here. Let's go back. The homes over there in 3 months had gone up $300,000.
Oh.
And people were paying over asking price for those now. It's insane what they're doing. It's, what people say, oh my gosh, you paid $10,000, $20,000 over? That's a lot. Other parts of the country, California, Florida,
Yeah.
people are paying a lot.
So it comes down to a percentage over asking.
In a sense, yes.
All right.
Inventory is extremely tight in that market. We have to just wait in the future to see what's going to happen. Is it going to stay there? Will it stabilize? Will it adjust? We don't know.
So, do you have any fear of another similar to 2008 with people being upside down in houses?
No, but 2008 was different. There was far too much inventory being built in the early 2000s
Okay.
going into 2008. And there's a couple different factors. And if you look at population trends, 30 years ago, there was a baby boom. That's why we have part of our problem right now. Well, let's go back to 2008. There was too many homes being built.
Yeah.
There was a fair amount of homes in the marketplace. Lenders were giving away money. There was things that politicians do that give Wall Street leeway, freedoms. So the market was flooded with homes and capital. I remember talking to a guy on a Friday who had just had a Chapter 7 bankruptcy discharge 2 weeks before. And he was closing a week from that conversation we had. $400,000 home, no money down, no income, no credit. And I said, you don't even have a job. That's okay, I'm going to flip it in 6 months. That's what a lot was going on.
Oh.
And it just it kept growing and growing and growing until the spigot turned off, and the spigot was money. Wall Street the banks hit a grind. They stopped.
All
And I
right.
remember speaking with certain real estate agents, they looked back on that time. They said, we came in the office on Monday and the phone just stopped ringing. Just stopped.
It was that. It was
Just like
light
that.
switch
I've
like
heard that from multiple, just like that. It's done.
Wow.
This market's very much different. This is a supply and demand market. There's a certain supply. It's not that much because after 2008, 2010, 2012, builders were cautious. We're not going to go way out there in our land development, get overextended, have inventory sitting. So they've been very cautious. Now, consumers, that first-time home buyer that was coming in the marketplace a few years ago, they weren't interested for a long time. 2012, 2014, there were different incentives coming into the marketplace where buy a home and you get a $15,000 tax credit. Let's do something to get the market kick-started. And those are short-lived. Sometimes they just, government incentives just merely increase price, not necessarily demand.
Right.
But the first-time home buyer was young, and they remember their parents going through the recession, many of them losing their home or going through a short sale, hardship. They thought, I'm not buying a home. I'm not going through that. I remember what happened to mom and dad. We lost our home, and I had to move into apartments. So you see all these high-scale apartments coming into play.
Oh my gosh, they're popping up like weeds.
So the first-time home buyer, instead of buying, is moving into a cool apartment. Why not? It's got all the amenities, rec rooms, bars, pools, whatever.
I don't want to share a wall.
But that was the demand at the time.
All right.
So housing wasn't really moving.
Yeah.
So there wasn't demand. Builders weren't building. All of a sudden, they realized, hey, I'm spending a lot of money. And my parents went out and bought again, and they're doing great, and they're happy, and I'm renting, and I don't see anything for it. All of a sudden, this transition starts to take place where they come out and they start buying. And this is the boom that from the baby boom, 25, 30 years earlier, the population growth. Families are being formed. There's a demand for housing.
All right.
So all of a sudden, I remember a few years ago talking to people, realtors, it's like, when are we going to get some inventory? Because people weren't listing. Builders weren't catching up.
This has been a complaint for a while.
Yes, several years, easily. And it just kept growing and growing. And then COVID hits. And everything just kind of stops. Everybody's like, what are we going to do now? What happens? But not for very long.
Yeah, it was like everyone looking around and be like, okay, and then they went back to work.
Yeah, it's like, and I'm working from home.
Yeah.
This is cool, but I need a bigger house. So they start buying. Or my apartment's too small. I'm here with my wife or my significant other, and we're working at home. We're all over each other. Can't do this. Needs space. People start buying, and the frenzy continues. But then we have supply issues, labor issues. We can't build. People aren't going to sell because they don't know where they're going to buy. When they get to the point where they can't buy because they have a home to sell. Your offer's not going to get accepted because you have a home to sell. Okay, should I sell, go rent, and then go buy? Which is there's different ways people are getting there.
Awfully big chess pieces people are moving.
Yeah. Well, like one thing we're telling people to do is sell your home, lease it back from the buyer for 60 days. So it gives you 60 days to buy, but you don't have a contingency. There's different ideas and strategies we try to come up with. It's risky, but it's a way to get you in.
Right.
So there's multiple factors that led to this inventory issue. How do we get out of it? Well, we still have a lot of young families forming that want homes. We have people that are empty nesters. They want their dream home, their last home. It isn't, I'm moving down to a condo. I'm moving, the kids are gone, I'm going to have some fun. They have certain demands. So there's a lot of pressure on the housing market for inventory, for the homes. And everybody wants them. Everybody's willing to pay for it because it isn't just a financial decision. It's gotten to be an emotional decision. But
they are, to a point, right?
We're seeing this demand continue for several years. It's supply and demand. It's not based on there's a whole bunch of money chasing too much inventory, and we're going to forget every underwriting requirement. People are being underwritten.
I mean, money's cheap.
Money's cheap.
So does that have something to do with it?
Well, it helps in affordability.
Okay.
And that's a great point, because if you go back, people are saying prices are too high, it's unaffordable, it's unsustainable, no one can afford them.
But it comes down to the monthly payment.
If you go back to 2006, the earnings were, median earned $6,000 a month for a couple. Interest rates were 6%. The median home price countrywide, $195,000. You had a certain monthly payment. Today, median home price, $395,000. But that income is $9,800 as a median income. So the income is substantially higher. That monthly payment with a lower interest rate at 3%, 4% is only a little bit higher than what it was in 2006. So monthly payment-wise is only a little bit higher, but the income to qualify for it is substantially higher.
Oh, interesting.
Housing is very affordable with interest rates being low. Don't get freaked out about the price. Yeah, people are concerned, I had to pay cash over purchase price. That's because the appraised value hasn't caught up with the sale price yet. There again, we have an analysis we can do for people to show them, if you're paying over asking price, when are you going to catch up or be at zero? And it gives them a little bit of peace of mind that I'm going to get back to that 0 point and gain equity after that. But the affordability is still there.
Yeah.
And until we get to a 6% interest rate, which I hope we do not, more on interest rates in a little while in our forecast.
Right.
But buying is more affordable than renting. You'll build wealth, you'll have tax incentives, and it's your home. It's your place for your family.
This
So
definitely helps opportunity-wise with your financial success
Yes.
overall, I feel.
you will gain,
It's
you'll
a
have
tool.
more wealth overall in your life as a homeowner than a renter.
Yeah.
And it's your home, it's your family, you can do what you want with it. So it's more affordable now than it was in 2006, even though the prices are substantially higher,
Interesting. All right.
based on income
Yeah.
levels and interest rates.
All right. It reminds me, I just bought a toy. I bought a Wrangler, and you look at Kelley Blue Book or any of those things, it says value is here. And yet everywhere you look, values are 10, 20% higher.
Yes,
Or I shouldn't say values. Prices.
sales prices.
What they're showing, then what you see that they sold for. And I'm like, well, okay, who's wrong? Is it the one that's looking at data, or is the one that's actually looking at transactions that actually occurred? Like, well, that one's just late to the game. I mean,
Correct.
you don't know what the delay is. Is it weeks or months, or you don't necessarily know where they're getting that data, or what their motivation is for holding that data where it's at.
What's based on historical information that hasn't been updated yet, much like an appraisal of a
Right.
home or an assessed value of a home. If
Yeah.
you're looking at a home, don't pay attention to the assessed value. It's meaningless.
Right.
Where people
Well,
say,
that's just taxes. Yeah.
yeah, it's, that assessed value is 198. I'm not paying 260. Guess what? You're not going to get it.
Yeah.
It just,
Right. Turns
you're
out.
fortunate it's not taxed at 260.
Before we go, I want to talk about small businesses, entrepreneurs getting a mortgage.
Okay.
Because when my wife and I refinanced, right, when it was dirt cheap, even more dirt cheap than it is now, and we essentially just used her income because the banker person said it's a pain in the butt to get income stuff from entrepreneur.
Yes.
I've owned my own business since 2006. I haven't had a job. Right? So I'm like, well, if we were to get divorced and I want a house, you're telling me that I have to go through all these hoops? So can you just walk us through, let's just say someone's an entrepreneur on their own, or they're a couple that are both entrepreneurs and they don't have jobs, W-2s. Is it tough? Is it, like, what do they have to go through that W-2 person does not?
Let's look at the W-2 person. What do they have to go through? It's very simple. You have a pay stub. Here's your gross wage before any deductions. Here's your W-2. It shows your Social Security wage and then your wage. We use the Social Security wage because the deductions you make for Social Security are taken out of your taxable income. So
Right.
we use the higher number for a W-2 person. So someone makes, hypothetically, $100,000 a year as a W-2 person before any deductions, even though maybe they're bringing home 60. We use that higher number of
All right.
100 before deductions for
Okay.
qualifying purposes. Very simple. That, their credit score, any other liabilities, it's very easy to calculate in about 3 minutes how much home you can purchase.
All right.
Now, you're a self-employed entrepreneur. You have different tax benefits or
We get the
opportunities.
shoebox receipts. Right?
Who's your accountant? So as an entrepreneur, you're filing, there's multiple opportunities to file different forms, to write different things up.
Yeah, you
there's
got your Schedule K, Schedule C, sure.
There's a cost of doing business to stay in business. That's an incentive for an entrepreneur to be in business because you're creating a service, you're creating jobs. The tax code incentivizes that because if there isn't, you're not going to start a business because
Right.
you're not going to make any money. And you won't make it to create those jobs because the jobs that you create, they're again, add to the tax base, et cetera. So with all the write-offs or benefits you have as an entrepreneur, at the end of the tax return, you may have gross receipts, but you have a lot of expenses.
Yep.
Employees, taxes, insurance, all that gets passed through. But at the bottom of the tax return, it shows you making this much versus this much as the W-2 person.
Got it.
And it's something that we struggle with from an underwriting perspective, but we have to underwrite them per certain regulation that comes out of Washington to make sure that you qualify. Do you have enough income? Now, we have guidelines that allow us to add certain things back in that you write off, certain depreciations or expenses that we know are just numbers,
Sure.
not real losses. We add things back in to give you more qualifying income. Then again, different lenders and institutions have different guidelines for that. So if you've been turned down for that, I'd like to look at it
All right.
because we may be able to look at it
Well, I
properly.
didn't even ask. They just said, we'll see if we can do it with her income alone.
It's an easier path to take because to go down the path of getting all of your documentation raises more requests for more documentation and then more documentation. So if it works that way, it's
Yeah.
simple, go that way, especially in a purchase market where if you don't have to go through all of that, go ahead and just go with the W-2. What we do in a purchase market is we fully underwrite everybody beforehand before you even write an offer. So you know that you're already approved. All you need is your appraisal, title, and homeowner's insurance. We can close in 10 days because we've already done that, being prepared for this market. But if you are self-employed and want to go in and purchase without having that done, you could be in for some surprises.
All right.
So be cautious. Get fully underwritten first and make sure your lender's doing that. Some lenders are still just writing generic pre-approval letters saying, oh yeah, we looked at your stuff and we think you're good. Well, 2-3 weeks later, deals are blowing up because they're not good. So be cautious with the lender that you're working with. Make sure that you are fully underwritten, your credit, your income, and your assets.
All right.
To get that out of the way. All we need then is the appraisal. We're getting what we call appraisal waivers today. We don't need appraisals. There's enough data online to verify the value of the property you're purchasing.
Fair. Okay.
Or we're doing.
So you're not necessarily having someone put boots on the carpet.
Don't necessarily need that.
Okay.
Or we're doing drive-by appraisals where there's enough data online. The appraiser drives by to take a snapshot. Yes, that home is there. It's the same home.
Does the house exist?
It's there.
Got it.
So we're moving very quickly to get purchases done. You know, they're in 10 days once we have you fully underwritten. But then again, you have to be underwritten. W-2, self-employed, whatever it is, that has to be done before you write an offer on a home to make sure that you have an opportunity to buy that.
All right.
Because we will call the listing agent and the seller and say, look, this customer is already underwritten. It's as close to cash as you can get. Accept the offer. We'll close on your terms.
All right. Instead of someone that's like, I like that house, I'm going to go talk to a bank.
Well,
or
talk to whoever you
whatever.
want. Whatever type of institution you choose, make sure that they're actually doing everything in advance. Not just writing a nice letter saying, it looks great, and then finding out later that, whoops, we missed something.
I remember wondering about the pre-approval letter because it seemed when we asked for one because our real estate agent, this was when we first bought our house, 2002, 3, I don't know, doesn't matter. And they asked for a pre-approval letter and the bank just pounded it off. Like it was 30 seconds. I'm like, I could have written that.
Right.
Right.
Well,
these guys are cool.
For the longest time, institutions wrote pre-qualification letters. I could ask you a couple questions. What do you make? How many bills do you have?
Yeah.
How's your credit?
Fog this mirror.
And people would write a letter. It's like, that's meaningless. It's worthless. We've always underwritten the customer to make sure, yeah, you are pre-approved. You're done.
Got it.
So it makes it a lot easier than when our letter is attached to an offer, the likelihood of it being accepted is substantially higher.
All right. All right. So you see the market staying hot for a while, it sounds like?
It's going to stay hot. Now, at some point, markets adjust. It will level off to a point where maybe interest rates will increase a little bit. Prices will get to a point, and as interest rates increase, the affordability issue is going to affect some people. So traffic will slow down. Different markets are affected differently. When the Fed starts raising, if corporate America starts to slow down a little bit, is the higher end market going to slow down? Because people have done very well in the marketplace. If the market contracts a little bit or has a correction, are people going to stop paying on the higher end?
Well, stock market's been having a correction.
But are we going to continue there? Will it stop? Will it rebound? We don't know yet. There's too many variables going on in the world and in the economy. What's going to happen to the second home market? That's been on fire. But
a second home market?
Vacation homes up north.
Cabins and stuff like that?
Yeah.
Okay.
Or, got a place in Florida, a place in Arizona. What's going to happen there if the economy slows down? Will that market get hurt at all? So a lot of variables we don't know yet that we're monitoring. But the overall market for primary residences, especially here in Dane County, it's going to be hot for quite some time.
All right.
Because high income earners, solid income earners with good credit backgrounds can buy the homes, they can afford them, they want them. The inventory just isn't there yet. That's going to take a while to catch up. We need new construction. That's going to take a while. There's the land entitlement process, there's materials, there's little circuits for refrigerators and ovens that we can't get yet. That's holding up new home occupancy. People can't get, the littlest thing that we can't get to help a new home be complete isn't there, and it's going to take a while to work out. So that's why I encourage people. There's a lot of housing stock in the marketplace that may not look the best today, but you can make a good buy in it, remodel it, all with one loan, turn it into your dream house. A lot of people are staying put. They gave up on buying. They're just remodeling where they are. And we have an affordable way to remake that home your dream home with one loan today. And you'll know what your value is before you even start. And that's the beauty of it. So you know where you are, it takes the question out of it. And you don't have to worry about refinancing 6-9 months down the road where a rate's going to be.
Oh, we expect them to be higher. So
we expect them to be higher, but then again, if we are going into a potential recession, quote unquote recession, in early 23, rates will come down. Because what the Fed has to do now is curtail inflation. If they succeed, they will. Plus you get the supply chain issues worked out. Let's keep our fingers crossed on what's going on overseas, that is ending quickly and peacefully. inflation will settle down, interest rates will settle down and come back down to where we don't know yet. We have to wait and see. But
All right.
so those people that are frustrated, oh my gosh, 4%, that's terrible. Well, relax. It might be lower in a year.
Right.
We'll take care of you. They might go higher.
So funny
for a
that
little
they
while.
believe that 4 is high.
Well, as consumers, we get used to
Right.
free.
But it's also the same with $4 a gallon gas. We're like, didn't we see that? We've seen that already years ago.
I remember that years ago. That was
So
2002.
it's always these people with these huge trucks that are like, all this gas is expensive. And be like, well, there's other options for transportation besides something that gets 7 miles per gallon. Life's all about choices. What's interesting to me, it's fun times, is that interest rates are so low that I feel like the wiggle room they have less wiggle room. Who's ever pulling the puppet strings, I guess, has less wiggle room. Where when we were at 6, I mean, you had some play.
Well, that's where the Fed is at a delicate balance right now because they have to do something to curtail inflation. Rates they got nowhere else to go lower to stimulate the economy, and they can't because the economy is already theoretically overheated and inflation is too high. So they've got to raise, they have to get aggressive and put the brakes on some things. But that gives them some cushion to come back down in the future with other things being worked out. There again, the supply chain issue hopefully getting back online, getting materials to where they need to be, which will help the labor issue. People will be motivated to get, I can go to a construction job and I know I've got work for a couple months because they got the materials. I'm not going in a day at a time because we don't know if that truckload of lumber is going to show up tomorrow. We saw the train go by last night and it kept on going. It needed to stop here. Yeah. So a lot of things will be happening over the rest of this year that will dictate where we're going in the future. There's just so many variables right now. The Fed's going to make a move. People are going to, oh my gosh, the rates are going up. They need to go up.
Christmas is the 25th. What? Yeah, no one saw this coming.
Don't panic about things that you can't control.
Right.
Do the best you can within what you can control. Take advantage of it and find solutions to where you are.
It's all cycle. It's a game. Yeah. It's all good.
For us as a lender, we're doing everything we can and coming up with great solutions for people, no matter where they are today. People are still refinancing today. It's like, oh my gosh, I waited till rates are too high. No, you didn't, because we can reevaluate your whole financial situation in partnership with your CPA and financial planner, restructure your debt. You're still saving a ton of money. There are people, I helped someone sell a house. They sold their house for $275,000. They're buying their dream home for $450,000.
All right.
But the spouse worked for a large institutional bank. That bank would not qualify them, would not approve their mortgage.
Wow.
And they're like, what's the deal? Well,
your employer's not stable, right?
4 kids, no, pretty stable institution, but
right.
4 kids, they've been in the house for 8 years, they've acquired some toys, a couple of cars for the kids, credit card debt.
All right.
They just had too much debt. But they had a fair amount of equity in the home because the home's gone up in value over the last 8 years. I said, this is simple. We're going to take, instead of you putting $80,000 down on the new home, we're going to take $20,000 and put it down on the new home, the minimum amount possible. We're going to take the other $60,000, wipe out all your debt, restructure everything.
All right.
So they bought their new home, and by restructuring their debt, they saved $1,300 a month in cash flow.
Wow.
And they said, that's impossible. I sat down with them, laid it out. Here's where you are. Here's where you're going to be after you buy the new home, because all of this is going away. It's simple. And they thought, wow. At first he fought me. No, I'm going to get rid of that credit card debt myself. I said, how long have you been working on that? And she said, 5 years he's been working on it. I said, let's just do it.
Yeah.
Bought the home. They saved all that money. And I said, please don't jack up the credit cards again. Don't buy toys.
Right.
You have extra cash every month. Put it away. The kids are going to college soon. Meet this financial planner, plan ahead. They're living happily ever after. So there's solutions to come up with for people that are stuck or need to get into a home. What do we do? There's a way to come up with a solution instead of just saying, I have to just pay more for something that I think is okay. Not that I love. So
all right.
Find out what you want, be really clear, and we'll help you get there.
Cool. How can people find you, Bill?
They can go to my website, which is www.amerifirst.com/Brookfield.
All right.
That's where my license is for Amerifirst, or they can just call me 608-358-0404.
Nice. And someone will answer?
I'm there.
They better.
They'll call calls on call.
All right. This has been Authentic Business Adventures, the business program that brings you the struggle stories and triumphant successes of business owners across the land. We are underwritten locally by the Bank of Sun Prairie. If you're listening or watching this on the web, if you could do us a huge favor, smash that subscribe button, and of course, give it the big old thumbs up and comment. Let us know how you like the show and any questions that you may have for Bill. Oh, my name is James Kateman, and Authentic Business Adventures is brought to you by Calls on Call, offering call answering and receptionist services for service businesses across the country on the web at callsoncall.com, as well as Draw In Customers Business Coaching, offering business coaching services for entrepreneurs looking for growth on the web at drawincustomers.com. And of course, the Bold Business Book, a book for the entrepreneur in all of us, available wherever fine books are sold. We'd like to thank you, our wonderful listeners and viewers, as well as our guest, Bill Quigley, the certified mortgage advisor. I had to double check that. Like owner, guru, what are you on? The money man of Amerifirst Home Mortgage. Bill, can you tell us the website one more time?
Amerifirst.com/Brookfield,
right.
608-358-0404.
Awesome. Past episodes can be found morning, noon, and night. The podcast link found at drawincustomers.com. Thanks for watching. We will see you next week. I want you to stay awesome. And if you do nothing else, enjoy your business.